Dakota Gas has been doing better than budget now for the fourth month in a row. This is largely due to a hike in commodity prices, according to Katrina Wald, Basin Electric Manager of Financial Reporting and Accounts Receivable.
And if we look at S&G, and I think on a graph you can see where prices really spiked in February with that deep freeze event. Now those have kind of stabilized. They're coming in closer to projected prices. But we did see a benefit in February as a result of those high natural gas prices. Looking at oil prices for the year, those have been quite a bit higher than budget and have been a lot higher than what we've seen last year. Last year, oil prices kind of tanked. And now Brent and WTI are in like the $70 range, which is higher than they've been for quite some time. So that results in DGC receiving a lot more money for its tar oil. And the plant on a daily basis looks at the economics of S&G or all of its products, and at this time tar oil is really more economic than S&G. So not only are we benefiting from the higher prices, we're benefiting from higher volumes of tar oil being sold and produced.
Wald says fertilizer prices have been about 20% higher than projected year to date through May. She says N7 plays a part in that good news.
N7 is the marketing venture that DGC is a part of, and what they do is they'll look for the best place for that product to go. So they're trying to balance sales between DGC and then the other N7 plants in order to find the best pricing for DGC, and that results in better netback pricing because we lessen the freight and transport related costs associated with the fertilizer sales. So they have done a great job this year with marketing the fertilizer production. In addition, we've seen a lot of demand for diesel exhaust fluid. Those volumes are up probably 25% over budget. So once again, that's benefited DGC in helping to them to beat their budget for the year.
Trinity Turnbow is assistant plant manager at the Synfuels plant and says while prices will go up and down with the market, employees can control two other factors.
There's really three main items that drive how we do to budget, and that's the plant production, our expenses, and the price of the commodities we sell. And the last several months, our production has been, for the plant, has been very near budget. Tar oil has been well above budget, and fertilizer has been at, the production of fertilizer has been up to where we've been able to meet the demands of the spring season, which of course is when prices is at its highest. We've been consistently below budget in a lot of our major expenses, materials, contract services, freight, etc. And that's something that we've got good cost containment, and it's something that we've been doing well this year. And anytime you combine production and price above budget and expenses below budget, you're always going to beat budget for that month. And we've been fortunate a lot of this year for all those three things to line out for us.